Hi, everyone. I'm Clyde Bryan, and welcome to episode 15 of the Uptown Experts podcast. I'm here today with Joe Pinheiro, Senior Vice President, Network Development, Dominion Lending Center Group of Companies. Joe,
Perfect.
Welcome.
Hey, Clyde. Hey, it's great to be here. You know, I have a lot of respect for you. I think you're just a wonderful gentleman and obviously a wonderful businessman, and you're doing great things. So
thank you.
I was very appreciative to be able to come today. Thanks.
Well, listen, I mean, when I thought about who to have on next, and, you know, just to be able to talk about your expertise, your journey in mortgages, as, you know, the various sides of the business that you've held. And, you know, I figured with everything that's going on in the industry today, people want to know from the experts, from the guys at the top, right? So I said, let's bring in Joe. Let's have the conversation. But before we dive into the economics and whatnot, why don't we tell everybody a little bit about who is Joe Pinheiro?
Well, okay, I'll tell you a little bit about myself. Don't want to bore your viewers too much, but I've been around forever. I've been 30 plus years in the business. I was actually, a long time ago, I was a realtor. I was a mortgage broker, you know, back in the day where, like, it was a long time ago. Like, there was no technology in our space. I got the privilege of working for a company that we know very well, Mortgage Alliance Company, and helped grow that company to you know what it is as well. Now I've been working with the DLC Group of Companies for the last 4 years in May, which has been a phenomenal, wonderful experience, amazing people to work with. That's pretty much my work journey. I've been involved in association work for a lot of years. I'm the only individual that's been chair twice of our national association. Spent a lot of time, it could be argued too much time in Ottawa, and, you know, talking to our politicians. And phenomenal dynamics when you go to Ottawa and you actually talk to the politicians, particularly the Liberals. And like, I'm not going to, you know, pick a side here. It's not the place or forum to do it, right? But there is two very different views, you know, that we see in Ottawa. A lot of experience in working, you know, again, in lobby efforts and so forth, as well as I'm an educator. As you probably know, I've taught thousands, maybe 18,000 Ontario students mortgage agents courses. I taught you as well.
Me.
Yeah, and it's always a great when I'm going around and somebody says, "Do you remember me?" I always say, "Yeah, sure, I remember you." And then, you know, because they have to be referring to the days at school, right? But that was a great time. And somebody once told me that, I think it was a university professor, said, you know, if you want to know a subject well, spend 10 years teaching it. And I spent 20 years teaching it.
Wow.
Right. So I always say, I learned, I'm a better student than I am a teacher. I learned more from my students than I could ever, you know, teach them.
But that shows your wisdom, though.
Yeah. I think it's you learn from everybody. You know, and this industry is really about learning and growing. Yeah. So that's kind of like my business world. I've done some cool things. You know, ridden a motorcycle across Canada several times, raised money for the Canadian Cancer Foundation, as well as the Canadian Breast Cancer Foundation and the Canadian Cancer Society, I should say. So I've done some cool stuff. You know,
cool stuff to say the least.
Yeah, I appreciate that.
I mean, not to talk too much about, you know, former days, but I remember, you know, seeing the emails of when you would do your ride, and I was like, wow, right? Like, just. I can't even imagine what that experience was like. Yeah,
it was quite an experience, and just like driving through, the prairies with hailstorms, and I drove like through some horrible weather and windstorms and hailstorms, just like miserable type stuff. Like you're amazed that a bike can stay up in the air, like stay on the road. And I remember I got back to a quick story. My daughter said, "So, Dad, did you see any moose?" I said, "No, I saw Jesus twice, but I didn't see any moose on the way." Like, there was a couple of times your heart absolutely skips a beat. You're thinking you're going down.
Of course.
You know, so, but, you know, great memories to say the least. Yeah. But, you know, people say, "Will you do it again?" No, I'm never going to do that again.
Checkbox.
Checkbox. we all survived those many years of doing that ride. So.
Well, God bless, and for a great effort as well.
Yeah,
right?
I appreciate that.
So, let's dive in a little bit. Okay. And why don't you tell everyone why mortgages? How did you get into the mortgage industry and do what you do?
And honestly, I think it was like I was a realtor back in the time, but like a short time, you know, maybe 2 or 3 years. And then I really got more interested in the mortgage aspect of it, right? And I think the reason why I really like the mortgages, first of all, there's so much to learn. You know, and I would argue even more so than say the real estate side, right? Yeah. No disrespect to realtors, but our world has evolved and changed. Like, the changes we've seen in the last 20 years in our space is amazing. Yes. And I'm a lifelong learner. So being in a profession where you're just learning, you're changing, you're adapting, you're getting better, right? And I really, really liked, and not to sound like corny and anything, but I really like helping people.
Agreed.
You know, and we make dreams come true and take nightmares away every day.
Yeah.
You know?
I like that one.
And then, and we, you know, and to have a position where you have your customers patting you on the back and sending you, thanks so much, thanks for helping my family, thanks for doing this. It gives you like a satisfaction and the energy that you don't get anywhere else.
Exactly.
So, you know, when I used to teach mortgages in the course, people say, you know, why you want to get in this profession? Well, there ain't too many jobs where your boss goes up to you and says thank you every single day.
I know.
And it really shows the appreciation that value that you bring. And you've been in the business probably almost as long as I have. The satisfaction when people say thank you for helping me, you saved me, Clyde, you made a difference in my family's life. I mean, that's just like you want to get out of bed a little earlier the next day with a little bit more.
You're making a real difference, right?
Absolutely, and that's the thing that I really enjoyed about it. I really liked selling the house was fine, but boy, getting them the mortgage and working with them and educating them.
That's where the gold is.
Absolutely, and the fact again, as I mentioned, this world changes every month now. There's something new, you know, and you know when people when mortgage brokers say, oh, you know, the government's changing this and making it more complicated and confusing everybody, that's a value to our business.
Of course it is.
Right, so we should embrace that differentiator in our space and tell like we want things to be difficult because clients need us more when they're difficult.
Exactly,
and we should be like running to those situations every time the government changes things.
Yeah,
whether it's good or bad.
They don't. Anytime there's change, where there's going to be, I'm going to say, ambiguity in the marketplace. Right. People are just not sure what to do. They're less likely to just walk into a bank and sign and transact. Right. They're going to want to have the difficult conversation and understand why or how it impacts their family, especially after the last couple of years.
Absolutely.
So these things I think are very positive, but we need to embrace them.
Absolutely. Like, let's not fight the government. They come up with word changes, like insured versus uninsurable. Like, that was a big kerfuffle. Like, what the heck does that mean? And we as mortgage brokers didn't even understand what that means.
Yeah, I remember.
And we didn't even understand how where this money that the lenders have, where does it come from? How is it securitized? Why do we need, forget about the consumer, And I think it's funny. Like, I think we have to talk to consumers in the manner in which they can understand.
Yes.
Because Canadians, like I say, Canadians are far from not smart when it comes to financials. They're ignorant because they're great plumbers, they're great accountants. Yes. That's their business, right? But the education part of what we do is so vital important.
Yes.
And the more people we educate, the more people we help, the more money we make, which in turn allows us to help more people and educate more people.
Exactly.
And I think if you get up in the morning going, I got to go help somebody today. Okay, a conversation changes, from I got to get a deal. And I hate that word deal. How many deals did you do? It's not deals. Right? No. Deals just has like an ugly connotation. Yeah. How many people did I help today?
Yeah.
Right?
Different way of looking at it.
A different way. And when people know that you're there to help them, man, the introductions, the referrals come that much easier.
Because it's genuine, Joe.
It's absolute.
And that's, I've said it for years, and I didn't give you a layup on this when we didn't even talk about this. I've said this on almost every podcast. It's the way that I conduct business here at Uptown, and it's what has made us successful throughout all the years.
Right. Because
we're actually trying to make a difference. Yeah. And it's not about the dollars and cents. The dollars and cents will come because you're actually doing the right thing.
Yeah, absolutely. And it just comes in droves once you start doing the right thing. There's no question.
Wow. So I didn't know you were a realtor, and I gotta just dig a little deeper on that. So tell me about that journey. What was that like?
Well, I think it was just like in my early years. Actually, it was one of the, now that I think about it, I remember, I was actually a mortgage broker first, and then I became a realtor along with the mortgage broker side.
Got you.
And the reason being, I was great at capturing clients, and I was giving them to realtors, so I thought, why am I capture clients and keep them myself?
Yeah, sounds like a
so that's what
journey.
happened. And then it got to the point, as you know, like in the real estate world, they started having all this compulsory educations. And this is at the time where, Mortgage Alliance was being formed out. So all this additional education was basically to get rid of guys like me who were thinking of doing something else, right? So it worked. Like they got rid of guys like me that were in it, but not so much in it, and then okay, so they got rid of me, right? So, and that's why they do that.
That's why they do it. They make it really hard.
It got to like, one more month to renew my license, and I had to have like 26 credits in a month. That wasn't going to happen, right? So the license was gone.
Yeah.
So that's how I kind of, honestly, to be frank, that's how I kind of transitioned out.
It's okay. Yeah. But you know what? I always say, like, I'm sure you gained a lot from it just by having access to the information.
Absolutely,
and learning and growing, right?
Yeah, and just understanding like real estate in general, right? And like I've been, I'm a small time investor and that kind of stuff. So like I like property. I'm sure we're probably going to divulge more into that.
Of course,
the question about that. So it was a great having that base knowledge really helped me in my mortgage career as well.
Awesome.
Like understanding contracts, understanding conditions and so forth.
So why don't you tell us a little bit about your role at DLC Group of Companies? What does that look like?
Yeah, so I mean, I got a great role there. So I work with amazing people, like I really do, and I think the DLC Group of Companies, I've really just assembled, I believe, like the best in the industry. They just have, right? And I think Gary Morris has made it a concerted effort to get the best in the industry. And all the same names I do, right? They're the top class. So basically, my job is to do whatever I can to contribute to the expansion of the organization through recruitment, through training, through building companies, and I've got a lot of success in turning a $20 million broker into a $100 million broker and converting to their own office and franchise and making them better business owners. So again, it's that that helping people, providing them options, have them engaged with other like-minded individuals. So my day is pretty much talking to people and helping moving them forward, moving them along, and building their business. In the last several years, as you know, we've had a lot of influx of bankers coming into our space.
Definitely. And
so I've had a large contribution in assisting everybody. Kind of, okay, how do we deal with the bankers coming into our space and making the transition smooth? So I mean, and that's been a lot of fun. And I sometimes I'll tell when I'm speaking to a bank specialist, like, I know how to transition bankers because nobody's messed up more than me. So you're going to take advantage of all the mess ups I did 10 years ago, thinking, oh, I didn't think about that. Oh, we forgot about that. Oh, you had a pension. Oh, I didn't know about that. You know what I mean? Like, we got it down to a science now.
Well, you got to mess up in order to get it right.
Yeah, exactly.
Right?
Yeah, exactly. And as a sales guy, sometimes it's, okay, we're going to do it. We'll figure it out later. Right? And that only takes you so far.
Wow.
You got to know what you're doing.
The first couple times.
Yeah, after that, boy, you better have it planned out, right? And we've got it down to a science now. Yeah, and we're having great success with that. So we're running with that.
That's good.
Yeah.
And so that's the current role. That's how it works today. And I'm gonna bring us back. And why don't you tell me, how did you actually get into mortgages? How did that happen?
I think I was applying for my life license at the time, right? So I've taken all these courses, not really sure, and I just came across a local gentleman in Kitchener-Waterloo who had his own company. We're starting it up. And I just kind of approached them, and we were just doing mortgages then. But I mean, we're talking like early 90s, right? Where you literally took a file underneath your arm and walked downtown to Beneficial, try to sell the guy in the deal. Like, that was the business. And he said no, and you go 2 blocks to AFCO, who was around the corner on Queen Street. Like, we had lenders like Bayshore Trust, nobody ever heard of them.
Yeah.
Shoppers Trust, all these lenders. And then this was before TD Bank even entered the broker space.
Wow.
And when TD Bank entered the broker space, and I don't remember the year, it was like, we made it to big times. Like, it was like, oh my God, TD now recognizes we're actually credible.
Yeah.
Right. And now you can see all the massive players. I mean, and the mortgage broker industry in Canada is just, it really has exploded.
Yeah.
Right.
It's changed.
And people recognize mortgage brokers as being their preferable choice now. They don't really recognize as banks being the choice.
Well, I think there's something to be said about that. I mean, no offense to the bankers, but
Absolutely.
You walk into a bank and you start talking to someone about a mortgage. One, I'm not sure if they're property owners themselves. So what is their knowledge about the experience?
Right.
2, have they done the required extra learnings that a mortgage broker or agent has to do just to be licensed and then to stay licensed?
Right.
And, when you really start peeling back the layers of the onion, I look at it and I say, if I walked into a hospital and, something was wrong with me, I don't want to just talk to any doctor. I want to talk to the specialist that has to do with my heart or whatever it is. Right. So, if you treat your health as something that's extremely important, then why wouldn't we do the same with the biggest financial decision that we're ever going to make?
And this way, like the banks, we all know great people at the bank. Obviously, they have wonderful people.
Of course.
And they do great jobs and so forth. But, it's like, again, TD Bank, we love TD Bank.
We love TD.
But let's pick on RBC, right? Because they're not
they're not in the
channel.
space.
They're not in the space. Or at least not in the
Not even.
But like RBC, you walk into RBC, get a mortgage. I mean, RBC has really one thing in mind, right? And like I would say, RBC, they will treat that customer with respect and kindness and courtesy, all the great stuff, no question, right?
Of course.
But they have one client, and that's the RBC shareholder ultimately.
Yes.
Okay, it's you and me who own the shares, okay? And where you bring value to the RBC shareholders is get that customer, get that as a lifelong client.
Yes.
And then you make, the value in that client is in the lifelong relationship RBC is going to have with that client. That's what adds value to the shareholders.
Yes.
Right? So getting the mortgage is one of those great anchor products. We can get them the mortgage, but there's no doubt that individual has to fit RBC.
Yes.
If it doesn't fit RBC, too bad. And and when we talk to bankers, because they're all great people, like we know, they don't want to say no, right? So they're being in situations where they have to say no, even though they say it's no because it doesn't fit RBC. But if I send him over to Clyde and his team, there's a yes there.
Yes.
So why don't I go join Clyde and his team? Because I want to do more yeses.
Exactly.
Right? Because we all just want to help people.
That's exactly what it comes
So
down
again,
to.
there's nothing wrong with their business model, and they're very clear about it. I mean, they get you. They want the credit card. They want this because they make money on a lifelong relationship.
They're a business, Joe.
And I'm not going to stop buying RBC shares.
No, neither would I.
They make a lot of money because they have a phenomenal business.
It's a phenomenal business.
Right. But it's a different model. And I think it's not like in my... in my belief, prejudice, I believe it's not the best place for an individual, a Canadian individual looking to buy their first home particularly. I think you have to go to a mortgage broker. If it fits one of the top lenders, TD, Scotias, and all those that we deal with, BMO, absolutely.
Yeah, we'll take you there. Yeah.
But I always say, and maybe I don't want to jump ahead to maybe your questions,
okay.
but it's a phrase I used to always say, and I'm sure you say the same thing. Like the mortgage we give our customers today, it's probably not the mortgage forever.
No.
Because the world changes. Life changes. And sometimes the mortgage today is the mortgage that makes sense for you to get into that home today.
Yes.
Right?
Yeah.
And one of my favorite sayings that a gentleman told me years ago about I was going to get into real estate investing. And I never forgot this. And one of the things I always think of when I'm buying little properties here and there, money in real estate is not made when you buy the home, and it's not made when you sell the home. It's made in the years you can afford to hang on to the home.
Exactly.
And we want to make sure that Canadians can maintain their home. And great wealth is created in the years that you hold onto real estate.
Well, that is
not the day you bought it, not the day you sold it.
That is a great saying, and it's one of the things that I was definitely going to ask you. So, why don't we jump right into that? Because we've talked about it on past episodes, and the question that continuously keeps coming back is, should you be looking to buy or transact in this current climate, in this current economic time? And, if you are, what would be the right reason? Why would you be doing this?
Right. Okay. So I think, first of all, and this is a great conversation. We know we can go for hours on this, right? Especially when we talk about what the Liberals are thinking, and their budget really speaks to this, right? Buying a home is a great investment first and foremost, but it's a great place to build and start and grow your family, right? And most immigrants that have come over, my parents included in the 60s, one of the first things they do when they come here is, how soon can I put a stake in the ground and call this my country? And it starts with a home. So I think this home ownership idea is alive and strong in Canada, okay? That we have to have a home, because you have a home, you have a community, you have a stake in the ground, you got a place to raise your children and so forth, right? Huge, there's all kinds of value beyond the investment of owning a home.
Yes.
Okay, and I think as the government of Canada, and this is where I'm going to beat up on the Liberals, if you don't mind, just for a second.
I don't mind.
They just happen to be the party, and again, it's not just when it comes to housing. The recent budget, and I spend a lot of time with the Liberals, and it seems like they know that Canadian has a housing crisis. That we have a housing crisis in Canada. We do. Right?
We do.
And they're not so, their policies are not so much needed to gear home ownership. It's more geared to how do we solve housing.
Yes.
So a lot of what you see in the budget is more help, more tax credits for building apartments, building rental units, building basement apartments, all stuff that we need housing. But the reason why we don't have a 30-year amortization for first-time home buyers across the board, that's not really that important to them. Okay, so the builders had a little bit more heavy lobbying effort. I'm not sure, because it doesn't really make sense. It's there's other reasons. It moves construction along. It has other reasons.
But don't you have to build them for people to live in them?
I mean, we have all kinds of issues with that as well. Who's going to build them?
That's the other problem.
That's the other.
Who's going to build them at these interest rates, right?
Yeah, and even the tradespeople. Now they are making some adjustments to that. Of who do we bring into Canada that can actually help us build homes?
Yes, but this plan, not to talk about politics, but this plan is a plan we've seen before, Joe.
Sure.
If we if we look back at, when maybe, some cultures had come to Canada in the past, they came here and helped build Canada.
Right, absolutely.
They went into construction, they went into whatever it may have been that helped build up the country.
Yeah, absolutely. And like, people talk, like I'm Portuguese, right? So, there's a lot of Portuguese come over and think, oh, they're hardworking construction people. No, back home they were farmers. They took naps in the afternoon. They went fishing. Right? They came here and became hardworking people.
Yes.
Because that's not really what they did back home.
But the opportunity was given for people to come in and now find a way to provide for their families.
Yeah.
And in order to then buy their first property.
Yeah, absolutely.
Right? So, yes, again, this is not a political conversation, and I'm not saying I support the Liberals, and I'm not saying that I don't support them, but I probably don't. So
it's and like we all believe, like Canadians, we need immigrants, and we're always going to be a country with a lot of immigrants.
You have to,
but there is a strain, and I'm sitting with the offices in Ottawa, and I'd come right out and say, like, does the immigration minister ever speak to the housing minister? Because apparently, I don't know if you guys are aligned. Because the one time in Canada, if you had 200,000 people to come to Canada, there was like one house being built, or I can't remember, but it was one per family.
Yes.
Now, it might not be in the same area. You might have a lot of people come to Toronto, but we're building homes elsewhere.
But at least we're building.
Or at least we're building, and it's but now the ratio's like, and I heard it was like 4 to 1, 4 like homes that are needed for every home that's being built due to immigration. So there's a misalignment there.
Yes.
And that is, like we just know, it's not just housing, it's infrastructure, it's hospitals, schools. So there seems to be a misalignment there.
Yeah.
Okay. And that's a problem. And even like the average bricklayer, this is the latest study I heard, the average bricklayer in Toronto, unionized bricklayer, is 57 years old. Okay,
57.
57. So who's going to build these homes?
Who's going to build the homes?
So we have to change it. And they are looking, like they've, credit to the government. I guess there's a whole scoring system that they've adjusted to have more, tradespeople coming in.
Yeah. Well, again, I think back, it was done a little bit differently. So we did have a different group of individuals that were coming in to help us build the economy, build Canada, and helped us, get to where we are today. So hey, let's hope that things change in the coming years. And
and just one point, I just wish the government was still believed in home ownership for Canadians as much as new people coming to Canada believe in home ownership for Canada.
Well, yeah,
there's a disalignment there.
That is a very big misalignment. And if we talk about, just looking at affordability and the ability to qualify, we touched on this last week. And just because you can qualify for a home, doesn't mean you can afford the home.
No, yeah, and that is a concern. Like first of all, if you can get into a home, get into that home. If you can afford it, make sure that you can afford it long term. But you really have to look at your overall financial picture. Does it even make sense for you to own a home? Does it make sense for you to home in Toronto or Vancouver, the larger markets? Right, so I think it's more of sitting with clients. Okay, what is your aspirations? What is your family outlook? How long do you plan on being here? Right, but one thing for sure, when people talk about our price is going to go up, price is going to go down. Okay, I think to me it's simple economics. A lot of people who want to buy few homes, and eventually prices are going to go up. The problem is it just becomes an affordability issue, and that's why we're seeing people starting to move out of town. Like, I lived in Cambridge for all my life, up until a few months ago. And that 401, once you got to Milton and we're driving in Cambridge, there was nobody on that highway. Now, it's jammed for traffic, because everybody has no choice but to move outwards to find their home. And we need to build more homes. I'm not going to get into the whole green space, because that could be very politically charged. Right? But we have to start looking at alternative ways and different strategies. And there's a lot to be discussed. We just need a willingness from the government to say home ownership is important, not just housing Canadians.
Yes, I 100% agree with you. And that's where I think obviously we started seeing more conversions of single family to multifamily to high rise. And, even here in Vaughan, it's turning into high rise central all of a sudden, right? But I think that's something to be said with also aligning it with more bringing in affordable homes.
Right.
But what I will say is probably, I'm not sure how many families in Vaughan at least want a 1-bedroom plus den. right?
Right.
So I don't think we're building the right type of home for the community.
No, I don't think we're building the right type of home. And the problem too, when it comes to building homes, a lot of it's like a municipal level. So you got municipal, you got region, you got provincial, and then you got federal. And everybody says, oh no, we should have higher density. Okay, we're going to put it here. Oh no, not in my backyard. But I agree, we need to put it. Just go put it, do it at Guelph. That's a good place. So and that's a problem you're dealing with municipal governments, right? It's a great idea. I just don't want it here.
Yeah, that's true.
Just do it over there.
That's true. Well, it's the reason why, you get condo towers proposals that are, again, even here in Vaughan, and all of a sudden it's right at the corner of Major Mackenzie and Weston Road. Huge towers proposed by a group, and I get it. It's a lot of towers right in the corner. But if you don't say yes, how do you solve the problem of...
Exactly.
So it's almost a catch-22. What do you do?
Right. And I think the government, like, this is a 10-year problem, by the time we try to sort this thing out, which means to me, again, when you talk about real estate prices and so forth, it's not like supply is not keeping up with demand today, and it's going to be worse 3 or 4 years from now. I think that's reality.
Yes.
But at least let's start putting a plan in place. So in year 7, 8, and 9, we see some noticeable changes.
Well, if that happens, that's fantastic. But, I think that with everything that you just said, for me, listening to you, I'm saying, why wouldn't I go out and find a piece of real estate that I can afford?
Right.
In order to be able to at least benefit from owning that real estate over the next 3 years, 4 years, 5 years. Right. And then even if I need to sell it to get closer to where I want to be.
I agree. And I was just at the gym the other day, and I'm just, in the locker room listening to some guys talk. And, I imagine they were in like late 30s. And they were basically, I'm never going to own a home. It's never going to be possible for me. The government's messed me up. I'm done. So this is like a bad feeling to have this segment of population feel that way.
Yeah.
Like and what are they doing? They're spending the money on the cars. They're spending the money on this because what's the point? I'm never going to order a home.
But now you get a segment of the population where 100% they feel this way. They're spending their money frivolously, and they're actually just spending their way out of any opportunity for home ownership.
So I think it's twofold. I think the government hasn't given a whole bunch of confidence, right? A lot of doom and gloom. That's just the way news media is. But you're right. I think people have to look at their situation, and I agree wholeheartedly. And I tell this to my daughter who lives in Halifax: get in a home. And she's in downtown Halifax. Honey, maybe you can't afford downtown, but let's go over here. Let's go over here. Get into the home while you still can. Right? I know we're going to talk about interest rates and more affordability, but I believe you got to get your foot in the door. Make sure the home makes sense. Make sure it's a home. Like my dad used to say, never buy anything that you can't sell. Make sure it's a marketable area, marketable home.
True words, Joe.
Yeah.
True words.
Make sure it's that. So this way, things don't change so much. Make sure you can, if you can buy something that you can put some paint on it and clean it up, make it your home, pay down the mortgage a little bit, add some equity to as prices slowly go up. That's the great first start. And if you got to get help from a family member or your parents, that's great as well. But find a way, and I think that's why they need to talk to us mortgage brokers. Let's put a strategy in place to say, okay, if not today, okay, 6 months, 8 months. This is what you got to do. This is how you got to get ready. Right? And I think now, not to jump in with interest rates, maybe going in the right direction. Now's the time to start getting ready.
Yeah,
this is a big opportunity. Don't miss the next 6 to 8 months.
I think with the reduction that we just had, it was, in my opinion, the government kind of saying to us, okay, hey, heads up, we might change course here, right? And, to your point exactly, if we know that this is the sediment of the government, then why wouldn't we be looking at, okay, let me try to find something that I can qualify for, that I could afford to hold on to, come good or come bad.
Yep.
And then hopefully ride that wave up in terms of appreciation.
Yep.
So that way I'm now creating wealth for my family.
Yeah, absolutely. Absolutely. And it's small increments. Everybody's always said, the first 100,000 in equity is the hardest. The second 100,000 comes like that. You just got to get that step so you start building that equity. So I agree. Anybody that's thinking of getting the market, like we always say, when is a good time to get into the market? Yesterday or today. You know what I mean? Find a way to get into the market. Again, the home makes sense for you. It meets your needs, and you can afford it today as well as over the next little while. Make sure the affordability is there. Get into the market, because 10 years from now, your kids are 10 years old. And they're going to want a little bit more than maybe what they have today, and you have to do that.
That's smart. And, I think that's where, people maybe need to look at home ownership a little bit differently.
Yeah.
And, instead of looking at it as, okay, I grew up in this area, I need to live in this area. I mean, just because you grew up here doesn't mean you can't move away. Right? It doesn't mean you can't build roots somewhere else that is affordable for you and your family. Like, I know my family, we didn't start in Woodbridge. We ended in Woodbridge. Right?
For sure.
So, there was steps that were made along the way from, various parts of the city to end up in a community that we could live in and be comfortable.
Yeah, absolutely.
And so I just look at it and I say, why wouldn't you look at wherever it is that you can afford, right?
Right. Especially like with, if there's, transit and getting into town, but like not everybody has to live downtown Toronto.
No.
And I wouldn't want to.
I wouldn't, neither would I. Too busy for me, right?
No, I agree.
So let's talk about the CMHC 30-year amortization change for first-time home buyers. What's your view?
Well,
Was it enough?
First of all, you always have to applaud, the government when they, do something that's supposed to be good. Obviously, this is more geared to it's home builders, so it's new homes, right? But let's face it, new homes, you're coming up with 20% down. The 5% is the deposit. I appreciate later on you can refinance the thing 95 and so forth, right? But a lot of first-time home buyers are not getting, especially in this area, are not getting a CMHC insured mortgage.
No.
They're going to conventional, so they're getting the 20%. Most of it's coming from mom and dad and so forth. So those mortgages don't even qualify for the 30-year amortization. Okay, so I think it's, and again, not to beat up on the Liberals, it looks nice in print. Okay, it's something to say we're doing something, but I don't think they see the whole impact of that.
No.
I think what they could have done is just do the 30-year amortization with every first-time home buyer across Canada.
That would have been impactful.
That would at least give people some hope. You know what I mean?
Yes.
And the thing that's unfortunate, like I own some condos, and I had one of my tenants who wanted to buy a condo that came up for sale right on the same floor. Okay, and of course I was happy for them. Let's see if we can get you a mortgage. The rent they were paying me, they easily could have qualified for the mortgage. They didn't qualify for the mortgage because they had to get a 25-year amortization.
Because it wasn't newly built.
Yeah, and this was, so they had to stick to 25-year amortization, and this was last year before it started. 25-year amortization. I saw the property. I'm able to buy it at a 30-year amortization at 20% down.
Yeah.
So, and I've spoken to the government about this, all these changes, stress tests and everything, was to soften the real estate market the last 5 years. Well, what has it done to the real estate market the last 5 years? Nothing. Real estate market's gone up. Wow. And who's got these properties? It isn't first-time home buyers. It's guys like me picking up another one.
Wow, I mean,
because they made it easier for investors, small-time investors, to buy more stuff and made them more. And our competitive advantages, they can't compete with me when I'm putting 20% down, get a 30-year amortization.
No.
So, and that's unfortunate. That's not the way it's supposed to be. So here you got another family who's been knocked out of the market when they absolutely should have bought that home.
Yeah.
But, and again, this is the government's policies. And what does that do? It drives who's driving up real estate prices? It's the investors. It's people buying the second homes, people who got the money that they pull out from mom's house and so forth. It's totally, so this idea we're going to soften the market by making it difficult for people to buy, you made it difficult for first-time home buyers, it made it easier for guys like us.
Yeah.
And that's what's driven up the prices.
Because
and that's sad.
Competition.
At the end of the day, that's a problem.
Yeah.
And but again, they're not so concerned about home ownership for Canadians as they are housing for Canadians. Well, you're still living in a house. That's good. Okay.
It's not their house.
It's not their house, but they're still living in a house. Yeah, it's still living in a house. Right? Again, I don't want to get too passionate, but it's just the way it is now. That's fine. Things evolve, things change, and so forth. Right?
Well, I mean, if we look at other parts of the world, home ownership is expensive, and major markets, right? And would not to dive in too deep, but are we looking to model ourselves after the New Yorks or the Singapores or wherever of the world, right? Where it's expensive to own, right?
Yeah, there's no question. Like, I don't think we're Hong Kong. I don't think we're London, England.
No,
right? And I don't think we're New York.
No,
right? We're closer to probably Chicago, right? Toronto, and I know Toronto likes to see themselves as a major city, but I think the housing, we're. But the reality is, like, Toronto's a very expensive place to live. Vancouver's expensive.
Yes.
I think Vancouver's in the top 4 or 5 in the world. Toronto's down 8 or 9 or something like that. Yeah, so the reality is it's hard. Now, the problem with Toronto is that there's a lot of work business downtown Toronto.
Yes.
Like we know all the banks are there, a lot of financial institutions, a lot of big businesses are there, and people want to live where they work.
Yes.
Right. So, and because of the communication, the travel,
transportation,
transportation. Sorry, the commute to work. It's a big part of their stuff. So they want to live downtown Toronto, but unfortunately, they're living in small units, small condos, and so forth, which is not conducive to growing a family and so forth. So I think we're always going to have that. We're always going to have price pressures downtown Toronto, or even north of Steeles, or north of Bloor, I should say. And I don't think that's going to go away unless they get really creative and start using some of these lands better to build more affordable housing.
Yeah.
Right. But that takes a lot of creativity, and that takes will by the municipal government and so forth, which we just don't really see it.
We don't see it yet.
We see a lot of talk and great ideas, but now we got to implement them.
Yeah. It also takes time.
And it takes time, absolutely.
It also takes time.
Yeah.
So let me ask you about the rate change that just happened. And, do we actually think that there's going to be a real impact, moving forward? Like, have you seen anything?
I think, I think people are a lot saying, realtors, that the real estate market's it's going to get back going again once we see the first rate drop. And I don't think it's not so much because it's a quarter point, because you both, I know quarter point isn't going to make a whole bunch of difference, right? But it's the consumer confidence, and real estate is driven largely by consumer confidence. Do I feel good about what's going to happen?
Yeah,
drives real estate.
Well,
activity.
It's funny. Someone called me yesterday, and he's like, "Oh, my house has been on the market for 60 days, and I've only had 4 showings, but the rate dropped, and I had 5 today." And I'm like, nothing's changed.
Exactly. But it's true. Like, people feel good. That's why we don't buy homes in the winter. We don't feel good. But in the spring, we feel better. Right? It's just but it's driven a lot by consumer behavior and how we feel. So if we believe things are getting better, I'm going to go. Right? And people have this great fear of loss. Great fear of loss is a great motivator. If I don't do it, somebody else is going to do it, so I got to get there. Right? That's why auctions work. We all pay for more because I don't want him getting it.
Yeah.
Fear of loss, right?
That's true.
So I think that fear of loss drives activity, but it's that I feel good, I feel confident, things are getting better. So, I think it was pretty much expected that it was going to happen. This beating up this inflation rate to, 2%. I think it's 2.826, that April's number or May numbers. I could be wrong, my apologies.
Okay.
But 28 or 30% of that inflationary number is taken directly from the costs associated with housing, right? So if we didn't have housing costs that went up dramatically the last 2 years, we'd be in the 2-ish.
Yes.
Right, so we're there. So this is quarter of a point, hopefully relieve some of that strain on housing costs, has a further decrease in inflation, right? But, the government's funding, it's like, here's the quarter point, but don't you go spend the money.
Don't go spend it.
You know what I mean?
Don't spend it.
Don't do anything that drives inflation.
Yeah.
We had some great news today as far as our great news, and that's a great news. Employment rate went up this morning, just by a point. But again, it's that another measuring tool for the government to say, okay, we have to maybe reduce it. So I think we're very likely to see another one come in July.
I will happily take another quarter point in July.
Yeah, I think a quarter point in July, I think will be good. Anyway, we're still going to see some downward inflationary pressure. The one thing that worries me, keeps me up at night, want to guess what it is? It's what's going on in the U.S.
Yeah. I knew you were going to say that.
The U.S., today's job numbers were 226,000 new jobs, right? The inflation rate in the U.S. is still high. They're going to have a rate announcement next week, and it's 0% chance they're saying that they're going to touch the rate.
They are not coming down.
And the problem, that disparity between the U.S. economy and ours is a problem because eventually that's going to affect our dollar.
Yeah.
So if their dollar gets stronger and we drop ours by another quarter point, their dollar is going to get a little stronger, and now we have a problem with the dollar. And that dollar, the lower dollar will lend to more inflationary pressures on this side.
Yeah.
It's great for selling stuff to the U.S., right? Because the U.S. are going to buy more, and maybe that takes, so it's kind of like that imbalance creates nervousness in the economy. And I don't see the U.S. economy, there's nothing that gives anybody an impression that the U.S. economy is going to slow down.
No, I don't think it'll slow down at all.
No, so that's the kind of imbalance that creates a little bit of uncertainty. If the U.S. was right along with us and they dropped before us, okay, then we're just going like this, right? So I think we're going to be doing a little bit of sideways talk up and down for the next year until we have more of an imbalanced economies.
But I mean, even if we look at, people say, where were we before all this started? Pre-COVID levels.
Yeah.
I think like a 5-year at that time was probably somewhere in the low, I think we were maybe low.
I got a 5-year,
fours.
1.94, 5-year fix.
Pre-COVID.
Pre-COVID, 2019, I guess.
Yeah. So, I mean,
20.
yeah, I mean, even if we were to go back to pre-COVID levels, rates were still, in my opinion, very, very, very low, very affordable.
Absolutely. Yeah.
And so even at that time, I don't believe that was the true value, or sorry, the true cost associated with the interest rates on a mortgage.
Right.
Right. So I think we need to look back even further and kind of get people to understand that rates today at, let's assume you're looking at a 3-year, 5.5, or 5-year, 5%, whatever it might be, okay, still high, but I don't think you're getting a 2% discount off of where we are today moving forward, guys.
Right. And I think like the problem is that everybody's got used to this low interest rate environment. And we had it, like we had the .com bust. We had obviously the fall of the world markets in 2008 when the world was going bankrupt. Right? So it seems like we had like one thing after, and then of course we had COVID, quantitative easing. Oh, the European debt crisis kicked the crap out of us. Countries are going bankrupt. Quantitative easing, the price of money goes. Like we've had all these back-to-back things where normally they would happen once every like 20 years.
Yeah,
we had like 20 years of this back-to-back, and then just when we think we're getting out of it, we get hit with this COVID.
Yeah,
right? And then again, so like these interest rates have been normal. Now, I don't want to be one of these old guys, back in the time, but back in the time, my first mortgage was 13 1/8. And I'm not that old. That was 1991.
Exactly.
And it seemed to be after that, again to the 2000s, it was one crisis after another. And the government, through monetary policy, just ensuring rates were kept low. But people got to get used to the reality. Like, if we see a 5-year rate at 4.79, that's where we're going to be.
That's where we should be.
And that's where we're going to be, and expect that to be like this for a lot of years.
Yes.
There's none, unless, again, God knows what happens. I mean, there's always geopolitical stuff to screw things up. That's where I think we should be.
Yeah, agreed.
And I think Benjamin said by the end of this year, prime would be down to like 3. I don't think so.
I don't know.
Again, because Benjamin Till didn't know at the time stuff had happened in the last,
of course,
in the last 6 months. But 3.5 maybe by the end of the year.
Yeah,
maybe,
maybe.
Which is a comfortable place.
Yeah.
And it even like speaks to the stress test. Like I was there when they did the stress test. So the concept of let's qualify you for a rate that's this high, right? So make sure you qualify, but you're going to pay this contract rate.
That was supposed to be your buffer.
That was supposed to be the buffer. Exactly, right? So this way, we were all ready for when this happened. Okay, I know a lot of people like me who have a mortgage at 9.14. Ask them if they're ready.
They're not ready.
They're not ready. They're far from ready, because instead of leasing a car at 400, they leased the car at 800.
Yeah,
because they had all this space. And you ask anybody, and again, this is not mortgage brokers' fault or bankers or anybody. Nobody went to somebody. Like if I was a salesperson, Clyde, I didn't go up to you and say, okay, your payment is $1,300. But you're qualifying at the payment of $1,600. I need you to remember that $1,600. No, what's my payment? $1,300. Thanks, man. I'm good.
But that's what they want to hear, Joe.
That's all they want to hear. I think if the government really wanted to help people get prepared, pay that rate.
That's what you had to do.
That's what you had to pay, or maybe find a happy medium.
But imagine if they did it though. Yeah. This is going to be an unpopular opinion. Hands are already in the air. But imagine they did it, and they said you pay based on what you qualify.
Yeah.
Imagine how further ahead Canadians would be today.
Totally, and they qualified for it. So then that's what I mean. If the government's well-intentioned was to protect consumers, okay, from themselves, right?
Which was that they said, though.
That's what they said. Protect them from themselves almost. Make them pay that $1,600 instead of the $1,300. They wouldn't have leased that $800 car. They would have leased the $400 car.
No.
And then what would have happened is that extra payment would have been applied to principal. They go to renew it today. Hey,
happy.
My outstanding balance is less. My payment didn't increase. They did fine. So the government, I think, like they missed the boat to really protect the consumer, because there's nobody now who says, "Oh, I'm ready for 4% mortgage now." I'm not ready for it.
No, they're not ready because they weren't making payments based on it.
They weren't making payments based on it.
And I'm sorry, this goes back to some of the points we made previous in other episodes, but how many people actually exercise the lump sum at the end of the year? Or during the course of they're not going to do it.
Right. And again, I don't think Canadians were trying to put themselves in precarious situations. No. They look at the payment. They don't understand mortgages.
Well, they base their lifestyle. They base their month-to-month expenses based on what they pay, not what they were told they qualified on.
And don't get me wrong, I'm sure, and I know mortgage brokers who made a great point of telling people, hey, this is what the payments should be, $1,600, right? This is the stress that should go up. You're only paying $1,300. Be careful of that $300 buffer. Interest rates are going to go up, and I'm sure they gave them scenarios. But it doesn't matter how much work the mortgage brokers do. Unfortunately, a lot of people leave their office, and within 3 months, they're used to that $1,300 payment.
This is true.
They forgot everything. They forgot everything we put on the disclosures. They forgot everything. So I think in some cases, obviously, mortgage brokers, we do good jobs as well. Bank representatives, maybe talking about that. But Canadians, I mean, we're human creatures.
Yeah,
we adapt to the payment we have.
This is true. It's why, you know, I'm going to say 8 out of 10 times when I'm sitting down with my clients, I'm not forcing, I'm advising them to adjust their payments.
Right.
You know, I always say, okay, you're at $1,785. Is it going to hurt you if we take that to $2,000?
Absolutely.
Right? Can you afford the extra couple $100 a month? No, $2,000 is too much. Okay, let's do 19. But that $115 every 2 weeks, it's going to help you when the time comes.
Yeah, and I think like I'm a math guy, you know, like, and I would show people. You ask somebody, do you want to spend an extra $150 a month? No, because people look at you. No, thank you.
Yeah.
But you're going to pay your mortgage off 4 years sooner. You're going to save this much interest. Oh, hang on a sec. Yeah, maybe that does make sense.
Now it makes sense.
You know, so nobody wants to pay more if they don't have to pay more, but they don't understand mortgages, which again, it's not their business, and it's up to us to show people. And I would show them on my calculator. That's how much money you're going to save by doing this.
You love that calculator.
I love that calculator. I just live by it. Wake up 3 o'clock in the morning, play with it. and I would look at it, you know, and show it to them, and they would go, "How is that possible?"
Exactly.
I say, "This is how a mortgage works." And I think at the same time, if you told somebody, "Pay the contract rate," after 5 years, you're going to go $30,000 less than you really, and your amortizations are going to be dropped. And then if the interest rate does go up in 5 years, which let's make the assumption because it can't go to zero.
Of course.
And it's at 1.94.
Exactly.
Let's make the assumption it's going to go higher. This is what it's going to look like.
Exactly.
And you want to be that person in that position. You don't want to be the person that we see today going, oh my God, I can't afford this rate increase.
Exactly.
And we're seeing a lot of that. That's very nervous in the marketplace for sure.
It's extremely nerve-wracking because, I mean, what happens? That's the scary question that we are about to find out the answer to, because are they going to give you 40-year amortizations if you just simply can't afford it?
Yeah.
What happens?
Well, and I think like there's a lot of, and I think that's like everybody out there, if you have a mortgage coming out, you know, for renewal in the next like 24 months, which we have like a ton of them, 80% of them or something. Call your mortgage broker.
Yeah, definitely.
Because it's not about, no longer is it a question about an interest rate. It's going to be a question about your cash flow. Like what's actually happening here now.
What happened? How can you afford to go from $2,000 to $5,000?
Right, especially with the extra debt that you have and that car payment. You got to send your kids to university. You haven't done any home renovation. The roof's falling apart. You haven't talked and now the saving grace is wages have gone up the last 5 years.
Yeah.
And real estate prices have gone up to 5 years.
Thank God.
Thank God. Or else there'd be a lot more bankruptcies than we're seeing now.
Well, that's why people say it's just not affordable. Okay, I understand it's not affordable right now to buy a home, maybe your wages aren't keeping up with the prices of homes. But at the same time, if home prices weren't going up, we wouldn't have opportunity for people to now refinance their home.
Exactly. And people have a lot of opportunity. And it's a reset. Like this is a reset time in a lot of people's financial career or financial life. So when your mortgage is coming up for renewal, this is reset time.
Yes.
And the conversation you should have with mortgage brokers is, okay, what do I do with everything? What do I do with my credit cards? What do I do with it? Like it's a cash flow problem Canadians are going to have now.
Yes.
Right. And you need the services of a mortgage broker more than ever.
This is when you need to take out your calculator.
Yeah. This is when you got to break out the calculator, and you better see, because you survived the last 5 years, but now it's the next 5 years, right?
Yeah.
And again, as long as you, like I say, as long as you own a home, you're in a position to do that, right?
Definitely true.
And again, I'm a firm believer, get that stake in the ground somewhere.
Yeah.
And even if you have to buy it with your mother, your brother, your sister, outside of town, like try to get that stake in the ground. Make sure it's affordable.
Well, I mean, I'm seeing even now there are conversations with some of our investor families or just regular individuals that are coming to us saying, I'm looking to buy, and I want to buy with, my mom, my grandmother, and there's 3 of them going on title, or 3 families going on title to simply solve affordability.
Yeah, absolutely.
And there's nothing wrong with that.
No, and even like parents wanting to help their children. Like I got this thing, I call it the mother-in-law survey. Because I got my daughter who's a mortgage broker and my partner Lucy's mortgage.
Yeah,
so I'll ask them, that's my survey, mother-in-law survey. And I remember asking Lucy, of the 12 pre-approvals you have, how many are gifted down payment? 7. Like there's a lot of gifted down payment, and parents have a lot of equity, and they want to transfer some wealth for their children. Might as well do it now and help them buy a home now.
100% agree. I mean, here I'm seeing numbers that are probably a little bit higher than that, if I'm being honest. I think out of the new or first-time home buyers that are coming to us, we're somewhere between 8 and 9 out of 12 that are gifted. And, you know, we have a product that's geared towards that, which is our family lending product, right? And it simply talks to, you know, the parents that own a home that may or may not have a mortgage and looking at leveraging that property.
Right.
And, you know, whether it's a reverse mortgage or a refinance and whatnot, and putting that whole package together in order to be able to then lend that money to you know, your son or daughter in the right way.
And I think like getting the family involved in that conversation and talking to the parents, there's a lot of parents and a lot of equity that'd be more than happy. Just don't even know it's possible and how to do it properly.
Yeah, definitely. And there's strength in that though, right?
Absolutely. And the parents want to see their kids own home.
Yeah, of course.
Right. So,
and if there's an opportunity to do that, I think there's hey, you got to find a way, because if not, you're just further behind every year that you don't, right?
Exactly. And like, you know, the hard truth is, like those that own real estate just are that much more wealthier than those that don't. It's just a hard fact. So try to get in if you can. And again, you know, don't get in if you can't afford it, if you're going to plan on losing it and it's going to drive your marriage to divorce. And don't do it that way. Do it for all the right reasons.
Exactly.
Right? And make sure the affordability is there. But try to find a way.
That's great advice from Joe Pinheiro. So, Joe, let me ask you one more question. This one's for our mortgage brokers and agents.
All right.
And, you know, you've been around mortgages for a long time.
Yeah.
And I'm not going to get you to put a number to it. But, you know, I'm sure you've seen a lot. You know, you've worked with huge volume producers. You've worked with new agents. You've taught new agents. You're one of the GOATs, man. So, you know, what would you say it takes to be a successful mortgage broker or agent, or further that with, you know, a successful broker owner?
Okay, well, I think first thing to be a successful like mortgage agent, right? I'm a firm believer this. You got to like learn every single day. You got to be crazy when it comes to learning. You got to know everything about like money, finances, real estate, not just our mortgage business, but you have to be a very knowledgeable person. Knowledge gives you confidence, and then you're really adding value to the conversation. Okay, so you never stop learning. Every day is another day to learn. Right? Like they say, there's a saying that live like you're going to die tomorrow, but learn like you're going to live forever. People forget the second part. So be a lifelong learner and learn from the best. Hang around with those that are doing it, right? They say if you're the smartest guy in the room, you're in the wrong room. Go find another room, right?
Exactly.
And a lot of guys end up being the smartest guy in the room for too long. So that's the first thing. And the first thing is talk to a lot of people with the notion that I'm here to help you. With my knowledge and my expertise and my influence and my relationship with lenders, I'm here to make dreams come true and take nightmares away. Like go with that feeling. I'm not chasing a deal. I'm not competing on a rate, okay? And bring more value to the relationship and the transaction. If the problem with our business is we've commoditized our business. What's your rate? What's my rate? What's your rate? My rate? Totally commoditize it. And believe me, Canadians, the reason why they ask you what the best rate is, and studies have been done on this, they equate low rate with low cost, which isn't always the case.
It's not.
And it's the only thing they know about mortgages, so what other question they can ask?
Yes.
And we fall into that. What's your rate? What's my rate? Okay. So get out of the commoditizing of our business. Bring real value, real education to the consumer, because Canadians want that. Millennials want that more than ever. Okay? They know they're not great in finances. They want to be part of the relationship, part of the discussion, part of making the deal happen. Engage them in that. So I think like the world's changed the way we interact with consumers, right? And it's not about rate. We think it's about rate, and the only reason why we think about rate, honestly, is because we're not educated on how mortgages actually work, and how money actually work, and how taxes works. So because we're not educated, we're talking to them at the same level. It becomes a rate question. Okay?
It's a rate conversation.
It's a rate conversation all the time. Right?
That really had nothing to do with rate.
Nobody understands anything about prepayment penalties. Nobody understands monoline lenders and the penalties to get out. Nobody understands anything. But nobody understands a friggin' amortization, or how to use a calculator, or how to use tax advantages, how to buy real estate that actually drives value and cash flow type questions. And all this information is free.
It's free. It's out there.
It's free. If you read a book a week on this subject, mortgages, finance, and real estate, and do that over 2 years, you'll be in the top 1% knowledgeable mortgage brokers in Canada, period. Yes. So I can't overemphasize that. Okay? It's understand your craft, get better at your craft, you speak with confidence, and go with the idea that I'm here to help you, I'm here to show you, I'm here to educate you. On top of that, I'll get you a good rate. Don't worry about it.
By the way, we'll get there, though.
But we'll get there. But I'm going to do more than that. I'm going to give you this and this and this. So find ways to add more value every single day. So I think that's for the new agents, right? I mean, for mortgage brokers, it's like brokerages and so forth. Okay, make sure I did a whole presentation on this, so it's like an hour-long presentation. It's probably a little bit more in depth, right?
Yeah.
But make sure your brokerage have. Oh my God, I could go off forever. That's another hour. Okay, make sure you build a business that's scalable. Make sure you business that's profitable from day one. Make sure you add value to your agents every single day. Right? Love them, wrap your arms around them. Okay, so I mean, those are just like four of the things. Yeah, I mean, and that's kind of like now. Okay, how to build a scalable business? Well, that's another half-hour conversation. How to make your business profitable, right? Ethics, culture within your organization. Make sure it's at the highest level. And culture is a really important thing. Like a lot of things can be duplicated. Culture is one of those things that can't, right? And align yourself with the right people. But I see mortgage brokers companies fail because they miss the most important thing sometimes is you got to run a profitable company. If it's not profitable, why are you doing it?
Exactly.
Right. And it should be part of your mission statement. I run a profitable company. So when people walk in the door, they know they're here to run the owner should have run a profitable company. I think it's important.
Isn't that like step one?
It should be step one, right? Be very transparent. Treat everybody equally. And people, at the end of the day, people leave people because they expect somebody else is going to make them feel more special than where they are here. So if you don't want to lose people, and people say, well, I'm going because of a better rate. I'm going because, a better split. I'm going because they have this lender. I'm going there because they're going to treat me, I believe, more special than what I'm feeling treated here. Right? So make sure you treat everybody special. We're all human beings. Create that community of culture. And again, I could go on. I got a whole PowerPoint presentation. We can do some other day.
For anybody that's looking for it, ask Joe.
Okay. Yeah.
But listen, Joe, I want to say thank you for.
It was a lot of fun. I appreciate it.
Yeah, it's been great. And anytime I can steal your ear and get you to bestow some wisdom on us, I'm going to take it. So why don't we leave it here? And I'll say thank you very much again.
Yeah.
And
this was a lot of fun. Hopefully you invite me back sometime because this was cool.
Listen, anytime you're available, we'll set it up and we'll get you going again.
I appreciate that.
All right. For this one, Uptown Experts, we're out.